Well, hello, friends, and welcome once again to another episode of the 360 Experience podcast. I'm your host, Tim Braheem, and it is my great pleasure today to welcome a client of mine who is a terrific loan originator with Neo Home Loans. His name is Justin Padron. Justin has been an originator for only 8 years now, and he's had quite a bit of success in his 8-year journey, especially considering that over the last few years it's been so difficult, as all of you know. He will fund about 140 loans in the calendar year of 2025 for about $70 million in production. I think what you're going to experience in our conversation today is a nice back and forth between him and I, relating to the subject matter of scripting, countering objections, presentation skills, systems of efficiency for refinances, which is something that he's had to deal with over the last couple of months as the opportunities have been much more plentiful to him. And just in general, a guy who has taken a very different and unique approach to being a true consultant as a mortgage professional. Before we get to my conversation with Justin Padron, I want to thank our sponsor, the Loan Atlas, which is now backed by its AI-enabled business planning tool, which is something you got to see. It's really a terrific up-leveling of that platform, and I'm really proud of what's been created there and how they're helping loan originators achieve higher levels of success. If you're looking to build a business plan for your business, you definitely need to have a consult. And we'll put a way to schedule a consult in the show notes below so you can get a demo of the business planning tool that could set you up for success in 2026. Additionally, I want to also thank our other sponsor, which is Performance Experts Coaching, which is my coaching company, who is now accepting applications for my Leadership 360 signature program. This is the only program where I actually coach people one-on-one. We take 12 clients a year, and we take them on a one-year journey. Everybody that has been on this show practically has been through that program. People like Josh Metal, Ryan Grant, Craig Strent, you name it. We've been doing this program for 14 years, myself, Scott Bertone, and Julie Wykes, and we are now accepting applications for Leadership 360. So if you're interested in being coached by me on a private basis, you're interested on going on a 1-week business and life planning retreat in Costa Rica, definitely fill out an application, and we'll set up some time to get to know each other. And again, in the show notes below, you can find the link to that application. And now, without further ado, my friends, my conversation with Justin Padron in the 360 Experience. What's up, JP?
TB, how are you, my man?
We're going to go with just initials the rest of the call. JP, TB. That's it. Actually, nobody has ever called me that except for you. And you started calling me that day one, TB. Like, do you use initials with everybody you know, or?
Not initials, but I try to give something that's special in a name to everybody. For some people, it happens to be initials. For others, it's a different nickname. I've always been a nickname guy. I don't know why. I don't really call anybody by their first name. It's always got something to do with them or their name or something that's just kind of a way for me to show my love for people.
Yeah, that, as you know, like having been in Leadership 360, like I like to give nicknames to people too. I think that's a really interesting thing you bring up though, so long as, Jay Flem didn't really like his nickname, but he let me get away with it all year. And so long as the person really likes the nickname, it's actually a really sweet thing to offer to somebody. It kind of bridges the gap and makes it a deeper relationship, more personable, right? So do you do that like with your referral partners?
I do. Yeah. One of my top referral partners, her name's Danielle Doty. I call her Dee Dee. And another buddy of mine named Robert Clayton, call him Robbie C, something like that. Just from growing up in sports. And there's a guy that I follow. You'll like this guy if you don't follow him. His name's Coach Ballgame on Instagram. And he always has unique little nicknames for his kids. And I've got 7, 5, and 3-year-old, and I coach my 7 and 5-year-olds teams. Every player on that team has a nickname. And it's just something that I do. I don't know why. It's just something I've always done.
Yeah, this is a really interesting topic because I often would give nicknames to the kids that I coached in baseball. And I remember I can visualize them lighting up when I first gave them a nickname. It's like I think that's a really cool little thing you do. So, all right, we got a little sidetrack there. Now let's talk a little bit of shop. We can tie it all in. You've been in the business 8 years.
Yes.
Congratulations on your success.
Thank you.
I have had the great pleasure of getting to know you, getting to teach with you. You've done some teaching in the Loan Atlas platform. You've done some teaching in the Highway platform. And the reviews are always outstanding because you're extremely well scripted. And I want to get into some of your scripting and your presentation skills and all that in a minute. But I want to brag on you a little bit too. I mean, you work for a company, Neo Home Loans, that is just full of terrific originators. I know so many of them. I mean, many of them are on the Loan Atlas faculty, in fact. Okay. And you are going to be the top producer in Neo this year in 2025. So congratulations on that.
Thank you. I'm excited about it. It's been a lot of hard work. This year's been ups and downs and tough. But we're getting to see some light at the end of the tunnel right now, which is really what I'm amped up and excited about as we head into the new year. 25 has been a great year. My time at Neo has been nothing short of exceptional. The leadership that we have here and the camaraderie amongst the mortgage advisors that we have here, it's different. It's something special. We try to make each other better, and I feel like the guys and the girls that are around me, they definitely push me to be better.
Yeah, like I said, I know that what you just said is so true, because I see the camaraderie and I see how you guys support each other. It's a really beautiful thing to watch. So let's establish something for the listener. You are going to fund roughly 12 loans on average a month this year, roughly 140 loans.
Yes, sir.
For $70 million in production, which is outstanding in a year where, we're still trying to get out of that tough market. And I think we're starting to transition. What percentage of that business is purchase business, first of all?
Good question. Coming off of November, we just had our biggest month we've ever had. We just did 12 million and roughly 21 loans this month in November. A lot of those were refis that we got to take advantage of that we've been kind of waiting for. I would say 85 to 90% though is really purchase business.
You say you were kind of waiting for the refis. I'm curious, what was your system and your process for being able to take advantage of the refi opportunities when they came about?
So when we close a loan, at the very end of that transaction, I always come back in and I always have a face-to-face meeting on Zoom. And it's where I establish and set the strike rate. And I talk to them about what to expect. I kind of pull up my screen and show them an amortization table and show them what their monthly interest savings would look like based on XYZ interest rate or XYZ interest rate, and just kind of show them different options and allow them to pick where they want to set their strike rate. And once we set their strike rate, then we go into the MBS Highway system. We put in the strike rate number that we want to watch for. And once that number hits, my team and I are on it. We reach out. We've got a kind of systematic process for this. We'll move them in the CRM to strike rate hit. And when we move them in there, it fires off a text message and an email. If we don't get a response back, it does the very same thing the next day. It does it for, I think, 4 days straight. And then once we get the response, this is actually something I was going to talk to you about, and no, separate from what we're doing right now. But one of the things I noticed is we got very hung up. We had like 150 of these strike rates go, and we got very hung up by sending an email to every single one of them, and they all booked on my calendar. And so what we did when I started to realize that we were getting too overwhelmed with meetings, I just recorded a simple video. And I put in that video who this video is for. If it's not for them, maybe they share it with somebody. And if they have questions, then book time on my calendar. But I essentially did what we did in that email to 150 people. I put it into a video format and encouraged people to get their application in, or if they had questions, book time on my calendar. And that completely cut the amount of meetings that we had in that 2-week period. But we got, probably 75, 80 applications for refis that came in.
So, you're a client of mine, so if you don't mind, we can do a little coaching here too. It's could be very helpful potentially. So I guess what I'm wondering is, why would they even have any questions? And when I say that, what I mean is that, first of all, like I want to unpack your post-closing call, because I am very passionate about how loan originators really flub that. They call them every day while they're a lead, and they call them several times during the transaction. Then as soon as they get paid, they stop calling them. And I love the fact that you're going back in post closing and doing a Zoom consult. And I want you to share in a moment what that conversation looks like. But I love the fact that you're letting them pick the strike rate. I think psychologically that's a really great call, because now they're putting their stake in the sand and saying, hey, I want to move forward on a new loan when this rate hits. But I guess what I'm wondering is, are you having the conversation with them at that time in that post-closing call saying, okay, now here's how it's going to work. When that rate hits, you're going to get a text notification. I ask that you respond back to it immediately and say, received, that's the thumbs up, you got it, I'm going to lock you in, I'm getting you reapproved. Somebody on my team is going to contact you to update any documents that we need for the file. If you have any questions, my team is capable of answering them for you, but if you really need to talk with me, I'm happy to make the time to do so. But have the conversation now about that loan in the future. So when that loan in the future becomes available, they don't have any questions because you've laid out the game plan. And as I say that, are you doing that? Because if you are, I have a hard time understanding why you would be getting so many scheduled consults. It's almost like if they're scheduling time in your calendar, that means that there's not enough finality already in their mind to where it's like you got to resell them. And I think the time to resell them is at the time of the post-closing call, not when the rate hits. What are your thoughts on that?
I totally agree with you. And this is an area where I definitely could use your coaching on this. What we did is we kind of got ahead of the curve. And what I mean by that is we went down to people that were 6.5, right? And for them to be able to refi didn't really make a lot of sense. But we wanted to get their application in the system. And I just let everybody know, hey, I hope this doesn't come off wrong, but the people that have their application in, those are going to be our first priority, right? And so I don't want you to miss this. I don't know when the rate is going to hit to where it makes sense for you, but we're getting a lot of questions that were coming in from people because they see the media and they see Mortgage News Daily, and they're like, hey, it looks like my strike rate's already been hit, and it really hadn't been hit yet. And so that was a lot of the questions. And then the other part of it is, here in Texas, our tax bills come out in October. And so when our tax bills come out, we have to collect for those taxes, October, November, December timeframe. It's funny, the last 2 times that we've had the ability to refi people, it's been right around that October timeframe. And so a lot of the questions were, especially with us doing the lender paid refi, is why are we having to bring money to closing? And so one of the switches and change-ups that I did is I put kind of a loan presentation in front of people that had, this is the no-cost refi. This is if you take on your cost. And then I actually showed a couple people because they were curious, like, hey, could we get lower? And showed them a little bit with a point being charged. Not very many people wanted to go that route. But I felt like it was a good opportunity to really kind of showcase what we do and how we do it by presenting those options to them, even though we had already pre-sold the lender paid refi. Some people were a little bit more curious and said, okay, could we get down, underneath 6 and into the 5s? And if so, what does that look like? And what does my break even look like? And so I had ChatGPT. I'll share all this with you for anybody that wants it. But I had ChatGPT. I literally would take an MBS highway presentation. I would put it into ChatGPT. I gave it prompts that I wanted it to kind of look at the presentation and answer. And majority of the time that we were putting people in front of refis that had a break even that was 16 months or less, even if they were paying a point right up front. I don't think that that's the best loan option for people, but I did have a couple people that wanted to go that route.
So first of all, that's interesting to hear that you could get a break even in 16 months or less. You said a lot there, and I want to kind of regress for just a moment because I don't want to assume that everybody on this episode that is listening understands what you're referring to when you talk about a lender paid refi, which in my vernacular is the same thing as a no points, no fees refi. Yep. So just go ahead and walk very briefly through the mechanics of what you're doing there. And then let's talk a little bit about the listener's benefit of like how to sell that and why it is a great loan to sell. But go ahead and walk through the financial mechanics of how you do it.
Yeah, so lender paid refi is essentially giving a lender credit to cover your section A, B, and C fees. So lender fees, credit report fees, appraisal, title fees, all of those fees are covered. And those are your, what do we call it? Your non-recurring closing costs, right? I learned that from you. And that's been a great line for me. We always tell people up front too, like the thing that we don't cover is your per diem interest. We don't cover that. Your prepaids, taxes, insurance, we don't cover those. But all of your section A, B, and C.
Because you're gonna pay those anyway.
You're going to pay them
Whether
anyway.
you owe a loan or not. This is just a pro rata portion of what you owe on the previous loan and on your tax bill. Keep going.
Correct. And for me, it's really a way to kind of showcase what we do and how we do it, because there's not a lot of lenders that do it this way. They'll kind of show the lowest rate to get them in, and there's not really a lot of guidance and advice there. But for me, what I like to do is, if I can reduce your debt and not cost you any money to do it, it's a no-brainer for you. And then the second piece that you have to add for a refi, because most originators, what I have found is they spend time talking about the savings, but they don't ever talk about, what do you want to do with the savings now? Do we want to reinvest that money? Do we want to have a principal pay down to lower your term a lot quicker? Do we want to start a 529 plan for the kids? Like, those are questions that I make sure we get answers to, because at that point, if I'm able to save somebody $500, $600 a month, well, I can pick up the phone and call the financial planner and say, hey, Tim, just saved them $600 a month. Might be a really great time for you to reach out to connect with them and see what they're planning on doing with that money. Here's a little bit about what they told me they wanted to do. And it's just a way for me to get them in front of the kind of ancillary business partners that I have a relationship with and that I trust.
Yeah. I'll go a step further. I just, hey, Justin, it's Tim. I just got off the phone with our mutual client, Anthony, and I'm going to be doing a refinance for him and saving him $179 a month. And one of the things that I suggested to him was to not take that money and just go spend it frivolously, but to have a meeting with you to talk about reinvesting that and to, building overall net worth in the long run by that reinvestment. So it's like, I just gave you, it's like, I'm going to go one step further and say, look, I just gave you more wealth from your client, and I encouraged them to contact you. Now, the thing is that let me give you a subtle tweak to the way that I used to position that principal prepay scenario. I called it a same payment refi. Mm-hmm. So we're going to refi you, and we're going to make the same exact payment that you're making right now and apply the savings to the principal and pay the loan off 3 years and 4 months earlier, or 4 years and 6 months earlier, and save you, and then you sell the big number. We're going to save you $26,000 over the life of the loan for free. Now let's get back to the lender paid, non-recurring closing cost scenario. So you're using overage money. You're giving them a slightly higher rate, just to make sure that everybody understands that. You're giving them a slightly higher rate. You're getting, if it's what's your average loan amount, by the way?
510. Okay,
so you got a $500,000 loan and you're getting 200 basis points. That's $10,000, and the non-recurrings are coming in at what, like 3,500, $4,000, 4,500, something like that.
Right there.
Yeah, and you're still making $5,500, but most importantly, you're doing a tremendous service for that client, because now I get that there are some people who are going to say, yeah, but can we look at the numbers, with me paying fees and me paying points? And whenever anybody would ask me that, I would absolutely show it to them. But what I would share with them is always this: the time to pay points and fees is when two critical components are in place. One, you are going to live in the home for a very long time, north of 5 to 7 years. Two, rates are at historical lows. Why is that important? Because the most important question that we ever need to answer is, how long do I need to borrow the money? How long will I need to borrow this money for? And how long I will need to borrow this money for is dependent upon those two questions that I just asked. Do I think rates are at historical lows right now? No, I don't. Do I think that there's a chance that interest rates are going to go down further over this next, say, 6, 12, 18 months? There is most definitely a chance. If you want to go ahead and pay the points and fees right now, I can get you that lower rate. But my suggestion is, let's just save money for free. And if it drops again, I'm going to do it again for you. And there is going to be a point in time in the future where I'm going to say to you, Justin, now's the time for us to really look at paying points and fees and locking it in, because you're going to be here a long time. And I think that these rates are about as good as they're going to get for quite some time. Okay. And when you're giving that kind of advice to a client, it displays that you don't have your own interests in mind that you have their interests in mind. And I would tell them all the time, and to be very honest with you, I make less money when I do a no-cost loan for somebody. But
100%.
I also am invested in the long-term relationship, and I see far too many people who pay points and fees. They pay $10,000 in closing costs, and 9 months later, the loan they have is obsolete because there's a better loan available, and they just wasted 10 grand by not doing the right thing at the time that they refinanced last. So I love the fact that you're doing this. I get so many questions, you'd be surprised, from people when I talk about no-cost refis. They don't understand how the mechanics of it work. This is also, are you also seizing the opportunity to ask them for referrals as a result?
100%. I've gotten a few refis just from them telling their friends and colleagues about it. 100%. It's, when the loan closes again after we do the refi, I still have that strike rate conversation. And in that conversation, it's just, hey, Tim, how's the experience? It's wonderful. Great. Hey, who else do you know that might be needing to save some money right now? And then just wait.
Yeah. Or who else do you know that would need someone to monitor their strike rate for them and establish a strike rate for them, and to potentially do a no-cost refinance for them in the future as well, right?
100%.
That's a very easy ask for referral, and I would get lots of intros. Now, back to your post-closing consult. Tell me more about that, because I love the fact that you're doing a Zoom call with people after you close a deal.
So in the post-closing consult, a few different objectives. One is to kind of let them know what's going to be coming their direction, right? Everybody knows about all the junk mail that comes their way. I always tell people about that, let them know, hey, if you look somewhere on that page, it's going to say something in very fine print that reads something like, hey, not affiliated with your lender. If you ever see that, most of the time it's junk. Take a picture of it, send it to us, let us know how we can be of help there. And then homestead exemption. Always want to make sure that they have their homestead exemption set up. With a lot of these refis, I've been having my team go in and look and see if everybody has their homestead exemption set up. We've had a handful of people that didn't have it set up. And so that was just another added bonus that we got to put in front of them of, hey, TB, you can save money on your taxes. You just need to fill out this form. Let us know how we can help you. We'll go through first payment letter, and getting their first payment set up. I'll introduce them to our customer success manager. Her name is Jamie Farrell. Jamie helps with a lot of the escrow account, property tax, insurance issues. She also helps with getting the first payment set up anytime they have a service or transfer. And then one of my favorite questions is, was there anything that we could have done better to make your experience better? And it's one of the best questions I think an originator can ask, because you're really going to get a lot of insight and info there that you can make tweaks on inside of your process. And I always tell people, look, I know our process is great. I know I've got a great team. Was there anything that we could have done different or better to make sure that you had a better experience throughout this process? A lot of the times they'll say no, and they'll go into whatever, you guys were phenomenal, yada, yada, yada. That's another opportunity where you can ask, do you know anybody else that we can help? And I wouldn't phrase it that way, but that's an opportunity there for you to ask. And then at the end of it, we'll kind of go through the strike rate and get that set, and make sure we have that established. And it's a quick little 15, 20-minute call for me. But I think it's one of the most valuable calls as well.
So phenomenal. And I'm super happy to hear that you're doing this. What I'm curious about is, how can we go a little bit further, as I said before, with the strike rate discussion, in explaining to them what's going to happen when the strike rate hits. So you proactively communicate to them the types of things that they would normally ask questions of that would slow you down, right? Okay. So it would be like something like, when the strike rate hits, you're going to get this text message. I need you to, you include in the text, please hit yes to confirm or whatever. As soon as you do that, I'm going to get you locked in and start saving you money right away. The next payment that you make will be the last payment that you make at the higher rate. And from there, it'll just be savings. We're going to be targeting a no points, no fees refinance in the future, as long as it makes sense. I find that sometimes people ask me to run the numbers for them that are the difference between a no points, no fees refi, them paying their fees, them even paying a point. If the break even is less than 18 months, or you pick a fictitious period of time, whatever you think is best as the originator. But if the break even is less than 18 months, then my encouragement would be for us to take a deeper look at whether or not it makes some sense to pay the fees and the points. If it's 18 months or more, then I'm always going to recommend that you do a no-cost refinance and that we just keep monitoring it and hope that they continue to come down and save the money. If you get the text from me, I'm trying to kind of thinking this through. How can you proactively communicate to them as the authority figure that here's your rate, it's go time, don't ask me any questions? That's really what you want, not because you're blowing them off, but because you know what's best for them already. The questions are only coming because they haven't been communicated to from their authoritative figure with direction. This is what we're doing and this is why we're doing it. So then that leads me to the final thing. When rates dropped, and you kind of alluded to this, so maybe you're already doing it, why not think about like any questions that somebody might have and just have a stock video that isn't salutated. Hey, it's JP. If you're getting, maybe you don't even say if you're getting this video, just say, hey, it's JP, and this is in regards to your strike rate being hit. Sometimes people ask me questions of this, and this, and you just fire that email to them or that text to them in a video form. Does that proactive communication cut down on all these people scheduling to want to ask you the same damn conversation over and over because, they're just not having their questions answered proactively?
Right. If we could figure that question out, I would have gotten back a week's worth of time, maybe 2 weeks of my life, because literally 2 weeks I was in meetings having these conversations day after day after day for 2 full weeks. That's where we need to get better, is making sure that those questions are answered ahead of time versus letting them come after the fact. The one thing I will say is we deal with a lot of first-time home buyers or maybe move-up buyers that haven't refied before. And so there's always questions about, when the initial loan estimate comes out, the credit's not on there. I don't handle those. My loan coordinator handle those. Lisa, she does a great job with it. But I think if we can figure out a way to let them know ahead of time, like, hey, your disclosures are going to come out. They're going to show that you're paying your loan costs. There will be a lender credit added on the closing disclosure. And as long as you trust me to do my job, which I know you do, this credit will be added. And what I have found is that takes a lot of the questions away after that. Sure. This is just a unique time here in Texas with property tax bills being due. Like, I'm having people bring $14,000, $15,000, $17,000 to closing, and it's just for their escrow account. And they're like, well, okay, I'm only getting 12 back because that's what my current escrow account has. You're covering my closing costs, so I'm out 5. It's like, well, no, that's not really the way you look at it. These aren't actual costs. These are just monies that you're putting into an escrow account that will go to pay your taxes and will go to pay your insurance when those premiums come due. When those premiums come due. And so you'll get random questions like that all the time. Like, I had a phone call this morning. I've got a girl that's going to sign later today. She didn't want to bring $14,000 to the table. I told her she was going to bring about $13,500 to the table when we initially talked. And I was just kind of doing rough math in my head in September, and tax bills then came out in October. So we were about $500 off of where she was going to be. And she was like, well, I thought I wasn't going to have to bring any money. I was like, well, do you see here in your email, option 2, this is the option you picked. We said $13,500 for your cash to close. And so just kind of walking her through that. I think a lot of the time, the people that I'm dealing with, they maybe forgetful is maybe a better word. They just don't understand it without actually physically seeing it. But once I walk them through it line by line and they see it, then they're comfortable.
Yeah, and if it's been 2.5 years since you had your post-closing conversation with them, then they're not going to even remember anything that you guys talked about, right?
Correct.
I know that it's greatly dependent upon the amount of money that you put down on the purchase, but I got to tell you, like, I would avoid escrow accounts like the plague for this exact reason. Like, I never recommended anybody impound their taxes and insurance because it just creates a lot of headaches and challenges when it comes to the refinance part of the transaction. So
definitely does.
I want to transition to another topic now, which is presenting. One of the things that I know about you is that you're outstanding in your scripting and you're outstanding in the way that you present yourself. So what I'm going to ask you to do is to walk us through some of the things that you say to a client in an initial client consult, what your objective is, maybe even any objections that you think are helpful for people to hear how you counter them. And what we're going to do right now is we're going to hear from the sponsor of the show. And when we come back, we're going to talk about specific scripting.
Out of curiosity, why do you think it is that some originators are sitting around with empty pipelines while others are having some of their best months ever in their careers? Well, as a coach and faculty member inside of the Loan Atlas, it is abundantly clear to me that one type of originator is armed with the information, the inspiration, and the implementation coaching they need to ensure 2025 is more successful than 2024. If you're ready to turn your goals into reality, the Loan Atlas is here to help. Click on the link in the description to schedule your complimentary success consultation now.
All right. So let's get down to the nitty gritty, because this is where I think you shine the most. Tell us about your consult, like your scripting and what you do to separate yourself from the competition that allows you to be so successful.
So this is my favorite part. This is the part that I believe as an originator, you need to perfect. And what do I mean by that? I'm going to take you back to 2022. Before I got to Neo, I had a 15-minute phone call with people. I sent a link and said, hey, fill this out. When they uploaded their documents, we'd pre-approve them, and then I'd send them maybe a mortgage coach, or most of the time it was just an itemized fee worksheet, and just said, let me know what you think, right? Like there was no guidance, no advice at all. Why would anybody work with me if there was a rate that was a quarter point cheaper down the road? That was the question that I kind of found myself asking over and over and over again. And there came a point in 22 where I got tired of feeling like a commodity. I had a lady that reached out on a Saturday. I took time from my wife and my kids. I pre-approved her. I gave her the letter. I called the listing agent. We helped her get under contract. And then come Monday morning, I get the email that we've all gotten in before. And it was an email basically stating, Justin, thank you for your help this weekend, but my bank down the road is an eighth or a quarter point cheaper, and I'm going to go that direction. I started to ask myself, like, man, what do I need to do to differentiate myself and make myself different? And that's when I found Neo and Ryan, and kind of, came here in August of 22. And I just studied and dove right into areas that I felt like I needed to improve. And it wasn't the relatability. Like I've always had a unique ability to relate to people very quickly. But it was more the guidance and advice that they were getting. And so for me, in that initial phone call, rate never comes up. We're not ever talking about interest rate. We're talking about their dreams. We're talking about their goals. We're talking about their financial makeup right now. Are they working with a planner? Do they have an estate plan in place? Do they have life insurance in place? Trying to uncover opportunities that we might be able to help them. One of my favorite questions is, why now? Like, why all of a sudden do you want to buy a home now? And most of the time you'll get back, we're tired of paying rent, yada, 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 right? When I hear rent come up, I always ask this question because it always puzzles people, and they kind of are like, I don't even know why you just asked that. But I always ask, what do you love about renting? And then I'll just wait. And most of the time people are like, well, I like not having to fix anything, right? And it's like, okay, well, what do you not like about renting at this point? And then you get the whole list of, I'm tired of paying other people's mortgage. I'm tired of rents going up. I'm tired of having to move every single year to a new place. And so it really kind of helps me understand what they're dealing with in their life. The other question I always ask is, what are your concerns about buying a home in the market today? And during 22, 23, and 24, that question right there opened up so many avenues for me, because it was always, well, I'm worried about interest rates. I'm worried about a recession and what that does to housing. Because if you think about first-time home buyers and potentially even move-up buyers today, they saw what their parents went through back during the Great Recession, and that recession really freaks them out. They don't understand that was kind of a one-off, right? During recessions, interest rates usually come down, home prices usually increase. And so I built a presentation that just allowed me to kind of show people, with whatever objection it is that we're facing, why buying a home is usually a better investment. That's the whole thing I try to focus on. And so if somebody's worried about interest rates, if they're worried about home prices, if they're worried about recessions, like I've got slides for all of that. And it's not just me, showing up and throwing up. It's me actually walking them through on a Zoom meeting, sharing my screen with them and making sure that they have full understanding of what we're talking about. I'll even invite real estate agents to this and let the real estate agent know, hey, I really would like for you to come watch this and see this, because this is going to uncover a lot for both of us. And the next time you get a client that feels this way, I want you to have the confidence that you can send them to me, and we're not going to try and get an application. We're not going to try and pull credit. We're just going to try to help them have confidence and clarity around whatever decision that is that they decide to make.
Well, I think that you're underselling yourself. When you said that I'm not just going to show up and throw up on them, I think actually there's a lot of strategy involved, intelligent strategy involved in what you just described, which is you're taking what you know to be the common objections that you have to sell against, and you're letting them voice them to you by asking intelligent questions. So I just want to make sure everybody got that. There's a strategy here, which is there's only so many objections. Is this the right time? Are rates going to get better? Are you the best lender for me? Why you over my credit union? I mean, there's a finite list of questions that people have in their mind, or objections that people have in their mind. You're asking them intelligent questions to get them to unearth anything that might be a roadblock to them moving forward with you. And you also have pre-prepared all of the counters and the answers to make them feel comfortable. That's correct. Strategic selling and through education. So a question that I have for you is, you reference you have all these slides, right? So are they like one-off slides, or do you have it all in one deck and you take everybody through the same deck, or is it that you have a different deck depending upon the answers?
So it's usually the same deck, but I don't give, and this is a mistake that I made early when I got to Neo, is I gave everybody the same presentation. Well, Tim, if you're not worried about recessions, you're not worried about interest rates, you're not worried about home prices crashing, why am I spilling all that information to you, right? You're just going to gloss over. That was one of the biggest mistakes that I made early, is I got over here and I just gave the same presentation to everybody. Probably lost some deals because of that, and that's okay. That was a good learning lesson for me. The deck is the same. Depending on how they answer questions, I'll have notes, and I'll kind of go through. And when we get to that slide that talks through that concern, I really slow down and make sure that they have a good understanding of what we're talking through. I've always felt like you needed to speak a little bit slower, a little bit more articulate, and really try to drive home that emotion with their decision, with their answer, if you will. But essentially, it's like, we don't have to convince people to buy a house. You and I both know buying a home is a really great investment for the right family. And so it's our job to uncover which are the right families that can do it or that should do it. Everybody's situation is unique. But at the end of the day, it's our job. And I think, our referral partners, they really lean on us for that, because a real estate agent can say it, but they don't have the data. They don't have the slides to show it. We should. And that's the one thing that I would say is different about me today versus, pre-2022. I didn't have anything to show people. All I had was, hey, now is a great time to buy a house because interest rates are 4.25%. Well, had people known that rates were going to go to 8%, they probably would have bought a house. I just didn't have the data to show it, but I wish I did.
So right now, what pops to mind when I ask you the question, what's the number one objection that you're getting right now that you're having to try to overcome?
I would still say interest rates. People are still thinking that interest rates are too high. And so I kind of, show them, hey, well, there's pros and cons to that. If you go back to October of 2023, rates were 8%. Does 6.5 or 6.25 still sound high today? No. Well, I know 2020 it was 2.75. Let me talk to you a little bit about what people had to go through in that time to be able to buy a home. You see, a home was listed at 400 and it had 10 offers in the first 5 hours that it was listed. Your real estate agent would text you a property and you really didn't even have a chance to go see the property because there was an offer deadline 2 hours from the time that they had sent you the home. You literally had to make a decision on whether you wanted to buy that home and whether you wanted to pay $40,000, $50,000 over the ask price to be able to buy it. Does that sound fun?
No.
No, not at all. Now you got a little bit more time. So yes, home prices are higher, interest rates are higher than what they were, during COVID. But here's the thing about interest rates, TB. One of three things is going to happen. Interest rates are going to go up. If you buy today, great, you have a lower interest rate. Interest rates are going to stay the same. Great, nobody hurt. You've got the same interest rate as what the market rate is 6, 12, 18 months down the road. Or interest rates are going to go down. And in that case, you can always refi down and reduce your cost of debt over time.
And at no cost.
And at no cost, 100%.
That's a really good way to frame it up. Here are the only three scenarios, and you've got a resolution for all three of them. That's brilliant scripting and brilliant presentation skills. Or, we talked about this in Sonoma at the Masters Retreat. Like, I don't know if you picked up on this, but Andre was talking about the lender subsidized 2-1 buy down.
Yes.
Like I'm going to tell you, man, I used to sell that. That's like the easiest sell in the world. If somebody thinks rates are going to get better, and be like, great, maybe you're right. Then let's just do a lender subsidized 2-1 buy down. You're currently going to be at, I don't know what rates are at right now, but let's just say 5% the first year, 6% the second year, and 7% years, 3 through 30. And assuming that you're right, and I hope you are, and rates drop, then you made out like a bandit. And all the money that is accrued in that account is going to get kicked over to your refi costs, and your refi is going to be free. Like Correct. That counters that issue like cold stone, 100%. Excuse me. A lot of people don't know what that is, what I just said. So I was actually just on a Zoom call with Barry and Dan Habib a little before we jumped on our podcast. And I said to Barry, I'm like, hey, what's back, bro? Is that lender pay 2-1 buy down? And he started laughing. He goes, man, I used to sell a lot of those. And I'm like, yeah, me too. And he even knew. He's like, it's right around 2 3/8 to 2.5, right? And I'm like, yeah, that's what it always is. So if you take the interest rate, listener, that is associated with, an overage of say 250 basis points, depends upon the loan amount. The larger the loan amount, the less that the basis point coverage needs to be. So on your $500,000 loan, it's probably only 2 3/8. Okay. So if you've got 7% at 2 3/8 overage, you take that money and you buy their rate down for the first year to 5%. The second year will be 6%. In years 3 through 30, it'll be 7%. But that's the perfect sell to somebody who thinks rates are going to come down further. Because so what if they do? It's great for the first year. You're locked in at 5. And oh, by the way, it's going to take that rate being at 7% for 2 full years and a couple of months for this to be a losing proposition for you. So essentially, for the first 4 years, you're in the black. I mean, before you even need to worry about being in the red. So that's the kind of stuff, though, that it's like this is, Barry and I talk about this all the time. Like, this is the place where the needle can be moved most significantly, is in your presentation skills. Like, if you can get really good at educating people and countering objections and making it palpable for them to move forward, that's where you're going to make your significant incremental increases in income. Because if I can get 2 extra people a month to say yes to me because I know how to present, in your world, that's probably an extra, 10, 12, 15,000 bucks, right?
100%. Yeah. It's those small little changes, those small little tweaks. Have you heard of Phil Jones? Do you know Phil?
Of course. Oh yeah.
Phil,
I know. I saw him speak at the Mastermind event a year and a half ago.
He's so good. And I heard him speak in Vegas. Tim, you actually presented at that conference in Vegas. I think it was Mastermind Sales Mastery, something along those lines.
Yeah, Mastermind.
But Phil, he came out and he started talking about, if this is value and I've got my right hand raised and this is price, if I start with price, which one looks more important? And then if I switch these, now which one looks more important? Sure. And when I heard that, a light bulb went off in my head, because I used to start with numbers first and then take them through everything. And when I heard that, I was like, oh crap, I've been doing this wrong. I need to talk about the value proposition and everything that we do for families first, and then get into numbers. When I made that change, that had a greater impact on conversion without question. And so I would take people through the presentation. I would answer their objectives or the objections that they had. I would provide them the data that they needed to make a confident decision. Then I would jump into the local market. I've got access to the MLS through a referral partner of mine. Shout out, Dee, thank you. And in there, I would do a lot of the real estate agent's homework, right? Here's inventory today. Here's where it was during COVID. Not a lot of difference. Here's what homes are selling at versus their list price. And so I want to get people fully engaged and educated about the market that they're going into. Where I live in Southlake, Texas, there's a neighboring town called Keller. Keller, you can get homes at 98% of list price right now. Does it make sense to go at it and get 2% off the purchase price? Or does it make sense to go full price, use the 2% in the credit towards buying down an interest rate to a permanent buy down, or even looking at a temporary seller paid, 2-1 buy down? And then you start to get the gears turning in their head of, oh crap, I wonder what this guy knows that I don't, because he's teaching me a lot right now. Mm-hmm. And when you can get them to reframe who you are in their mind, you have a lot more success at converting.
Yeah. And that's really good, by the way. And I think that we inherently are all looking as human beings for an angle. If you can teach me like an angle to dare I say, work the system a little bit, even though there's nothing illegal about it, but I'm going to pay the 2% extra in the purchase price and buy that rate down permanently and get a way better rate than any of my neighbors have. You just showed me an angle to using strategic financing, for lack of a better term, whereas everybody else is just selling, just the vanilla rate, with no other options or adjustments to it.
Correct.
What about you've mentioned your realtors. You mentioned Dee just now. How many realtors do you work with?
We work with right now about 14 consistently that are referring us everybody. I need to grow that number. Fully aware, or I need to go get bigger hitters. Either one.
Yeah. I'd go the latter. Rather than the former. I think you want to upgrade the 14. Not that you want to fire anybody, but you either want to teach them how to be more successful realtors or just look to add a couple of bigger producers, because I think it could get exhausting working with, say, 25 agents that give you one deal every 2 to 3 months. I'd rather work with 10 that give me 3 deals a month.
100%. Totally agree with that.
How did you go about, how have you gone about traditionally pursuing real estate agents? What's your value proposition and how do you target them?
So value propositions, conversion. I think my presentation, I'd put it up against anybody. And literally during 22, 23, 24, I went to several different appointments and just asked the question of, hey, Tim, who in the last 6 to 12 months, or how many in the last 6 to 12 months have told you that they don't want to buy a house because they're worried about interest rates, they're worried about recession, or they're worried about home prices? And light bulb went off. All these people, their eyes opened up. It was like, oh my gosh, I've got 12 different people. And I'm like, okay, here's what I want you to do. I want you to introduce me to 3 of them. And I want to show you how valuable we can be for your business, not only now, but in the future. I had a buddy that he's now a buddy. He was an agent at the time that I didn't work with. He sent me 3 people, and all 3 of those buyers closed within 90 days. He'd been talking to him for 15 months, 18 months, and he couldn't get them closed. But when he put them in front of us, in front of our team, we were able to help that buyer understand why buying a home was a good decision for them. And so for me, it's all about conversion. It's all about helping those agents make more money.
Well, that's all they care about.
Right. Totally agree.
That's why they're doing what they do for a living, is to make money. And if you can help them make more money, then you're their hero.
100%.
I love that strategy. Have you ever thought about, I think it's actually what I'm about to say I don't like as much as what you're doing. So I want to be clear about that. But to the extent that somebody isn't willing to give you 3 names of people, have you ever thought about just saying to them, would you mind spending 30 minutes with me and we can just have you play your typical buyer that is on the fence and let me take you through the consultative process that I would take them through and just have you see how compelling of a case that I can make that now is a good time to think about moving forward. I mean, I share that just more for the listener rather than you, because I like your process better. But for some of the listeners, they may say, well, but that agent doesn't trust me to just hand over 3 names. They have a loyal relationship with their existing lender and they're not going to cheat on them or whatever. Okay, then you don't need to get the number. You just need to show them, look, what would it look like if those 12 people got this consult from me?
Yep.
And after that, to the extent that you can't get the numbers the first time around, after that, you just ask for 2 or 3 numbers. So what's the plan going to be, bro, to try to up level your realtor base? Have you thought about that?
So this is an area that I admittedly I have struggled with, and I am going to answer this question. I want to go back to what you just said. That is the presentation that I give. I show them my conversion ability and walk them through. When a client says this is how it's going to be answered. When a client says this is how it's going to be answered. These are the visuals that they're going to get to see. And then at the end of that conversation, that's when I ask, like, hey, who has told you they don't want to buy because of this or that reason, right? And then from there, that's when I say, make the introduction. Let me show you how valuable we can be. Plan for new agents.
Hold on, before you go to that question, do you also share with them about your mortgages under management strategy, which is after the loan closes, I'm going to establish a strike rate and I'm going to do a lender paid refi form in the future as well. So all future refinances will be at no cost. Do you share that with the agents?
100%. And they love hearing that.
Yes, of course they do.
The other thing I'll do is I'll talk about our customer success manager. Hey, you're going to get an email every single year. You'll get to see updates about the client, their life, what's going on. Do they have an estate plan? Do they have a CPA? Whatever. And if you have somebody that we can connect them with, we want to connect them with your tribe. We're trying to help build family offices around people, but we need the agent's help in doing that. Otherwise, it's just going to be my people getting those referrals, and it should be going back to theirs, in my opinion.
Yeah, I love it. Okay, go ahead now. Tackle the agents.
So with new agents, for me, I think conversion's still out there. I think conversion is an area where agents need help, and I think lenders can also help there. The other strategy that I'm kind of toying with right now is creating a letter, sending it out to top agents. And it might be somebody that, say, Tim knows, right? I might just be like, hey, my name's Justin. Tim Braheem told me I should reach out to you and connect with you. I'm a top lender in the area. You're a top real estate professional in the area. Tim said nothing but wonderful things about you. I'm going to be calling you in the next 2-3 days. Yada, 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 right? Now, when I pick up the phone and call, it takes away the whole, why are you calling me? In that first 30 seconds, because they've gotten the letter, and in that envelope, it's a FedEx envelope that goes out. In that envelope is a book. Still undecided, 7 levels of communication. Another book I'm thinking about is Science of Scaling. I don't know if you've read that one. I'm kind of toying with that right now, but essentially what we're going to do is we're going to mail these letters, include the book. And now we have a reason to call. We've got something that we ship to them, wanted to make sure they got it, and then also want to build that connection of, hey, Tim, somebody you trust told me that I should reach out to you or thought it would be a good idea for me to reach out to you. And that's why I'm calling.
Yeah, you want that third-party endorsement. It makes it very difficult for them to say no. The way that I would always position it was, hey, do you think it would be a good idea for me to give Justin a call? And if you say yes to me, then I'm just going to simply call you and I'm going to say, hey, so-and-so said they thought it would be a good idea for me to give you a call because they thought it was, right? And now all of a sudden for them to blow me off, it's like blowing off their client or their friend or whoever that person is in their life. All right, let's segue for one final question, going completely into a different realm. What would you say the number one thing is that you're working on as a human being right now outside of mortgages?
Ooh. Outside of mortgage, it's just personal well-being. For me, that starts with sleep. It starts with waking up. It starts with affirmations. It starts with journaling. It starts with meditation. Exercise is super critical. I try to get 30 minutes in the weight room, 20 minutes on the treadmill, 20 minutes in the sauna every single day. Those changes have done wonders for me. Tim, you saw me in May of this year. Was not in a good headspace. I was not happy. I was frustrated. I wasn't taking care of myself at all. I was eating and drinking whatever. Wasn't sleeping consistently. Just I needed to make some changes in my life. And thankfully, with your help, with Julie and Scott's help too, I've been able to make those changes. To me, I think taking care of yourself first is truly what's going to allow you to take care of others, whether that's people on your team, whether that's clients, whether that's referral partners. If you're not taking care of yourself first, I think it makes that even more difficult to do. And so for me, it was just a lot of inner reflection and focusing on areas that I wanted to see better in my life and stop making excuses for it. And that's what I've really tried to focus on. But it's the evening routine, the morning routine, and making sure that I'm taking care of me before anybody else is up. And then once I'm taking care of me, now I'm in a really good headspace to go take care of everybody else that needs my help.
What are you doing for your evening routine? Like at what time are you shutting it all down? And is there anything you do to ensure that you have a good night's sleep?
9 o'clock is when everything's kind of shut down. My phone isn't really near me anymore. That used to be kind of the only way I'd wake up is have my alarm on my phone go off. I realized that when that happened, I'd look at my phone for 15, 20, 30 minutes, and that would just throw my whole day off. But now I would say sleeping in a cold room is something that my wife and I do. We sleep on 63 degrees. So we love it pretty cold.
Do you have one of those mattress toppers or?
I don't. Habib's on my butt about getting one of those.
8 sleep, right?
8 sleep. He's on my butt about it.
Supposedly great. I don't have one, but I've been contemplating.
I haven't done it yet either. But just making sure that you're stopping eating around 7 o'clock, a couple hours before you go to bed. Stopping fluids, an hour or two before you go to bed. No screen time. Reading before bed versus, what I used to do is just get in bed with my wife and watch Netflix like crazy, and we'd binge for 2-3 hours. Now it's, man, like we don't even have the TV in the room anymore. After we got back from 1440, I love not having the TV in the room. And literally the day I got off the flight, I walked into the bedroom and my wife had already taken it out of the room. So it's like little things like that where you can kind of decompress, take the stress of our business away. I think any advantage you can find there is only going to help you in your business life. No question.
It's also going to help you in your longevity. I mean, everything that you just described is backed by, all the longevity studies. I mean, everything from reading instead of watching TV. I mean, you keep your cognition up at a high level from Alzheimer's and dementia perspective, to sleep being the time when your body uses that time to repair. The one thing that you said that I have not yet done, so your statement is an inspiration to me. So did you go with the Julie Wykes alarm clock? Is that what you did, or?
Oh yeah, we have the alarm clock.
You have an old school alarm clock in your bedroom, and your phone isn't plugged in another room when you go to bed? It's
in the bathroom, and we have an old school alarm clock by the nightstand. And once it goes off, I'm lucky. My wife gets up with me. She's a girl that likes to work out early in the morning. So we get up at 5, and thankfully it's on her side. So there's no chance for me to hit the snooze button. But yeah, it's been fun. It's something that her and I get to do in the morning before we start the day, before the kids wake up. And it's something that her and I really look forward to every day.
That's harder than breaking a crack habit. I mean, the phone, the answering, I mean, I'm still, that's one vice I need to get rid of, the Instagram account. But damn, those videos are so funny, man. My algorithm's smoking good. Like I get a lot of funny shit in my Instagram. Oh yeah. And I like laughing. So that's my bullshit excuse that I'm telling myself as to why I need it to wake me up in the morning. Hey, bro, it was really a pleasure to spend time with you. Thank you for being such a great teacher. Happy holidays to your family. I'm super happy to hear how well you're doing on a personal level, and congratulations on your business success, and looking forward to sharing many moments with you in 2026, brother.
Thank you, my man. Appreciate you. Thanks for having me on. Have a Merry Christmas, Happy Holidays to everybody, and give my best to Liz. And man, one more thing, congrats to you and your Dodgers. I got home from our retreat in California and watched that crazy Game 7, man. I just thought about you and the joy you were feeling.
Bro, that was, I think, as a Dodger fan, that was the greatest game in baseball history. I mean, it was
unbelievable.
And you can congratulate me on one other thing before we go, which is going to shock you because I was shocked. I shot a 73 the other day.
Ooh, man. Congrats on that.
My best score before that was a 79, just to put it in perspective as to how much, I don't know where it came from. I didn't see it coming. I was just on fire.
Was that the course in Costa Rica?
Yeah. Yeah.
Oh man, that's a hard course too. If people haven't played that and they're listening, this course is insane. Elevation changes like crazy. So 73 on that, man. That's incredible.
With a double on number 9.
Dang.
Yeah.
Dang.
I mean, I'll take the 73. The only thing that sucks is my handicap is really low now, and I'm going to lose a lot of money as a result of it. So,
I'm looking forward to that.
Yeah. Maybe we'll get together and play. Good to see you, bro. Thank you so much.
You too. Thanks, TB.
Bye, everybody.